Good morning, everyone. This is Stuart. More interesting news on the AI front to share this week, with massive spending commitments from Mark Zuckerberg and AI investment insights from Michael Dell, along with the market cap milestone for NVIDIA. With data center investments to support AI expected to hit over $400 billion this year, and analysts now projecting upwards of $1 trillion in annual investments by the end of the decade, many investors remain skeptical of spending commitments from technology firms. We think this is a mistake. This morning, Meta CEO Mark Zuckerberg announced a spending commitment of hundreds of billions of dollars into compute, or in other words, data center infrastructure, to support the company's new AI superintelligence team, now up to about 30 members, each of whom is receiving compensation packages rumored to be on the order of $100 to $200 million. The company plans to build data center clusters on the scale of 5 gigawatts each over the next several years, each of which will have a footprint close to the size of Manhattan and the power to provide electricity to 3.5 to 4 million homes. This is a serious effort and parallels those announced by OpenAI, Alphabet, Amazon, and Anthropic. The leading AI labs are locked in a seemingly existential battle for model supremacy, in a race to be the first to achieve artificial general intelligence. Such capital expenditure commitments obviously are beneficial to the AI infrastructure ecosystem, from chips to energy to construction services. Recall that 3 years ago, investors penalized Meta severely for increasing its capital spending, but the stock is up on this week's announcement. So long as investors reward companies making these investments, and so long as company leaders believe in the strategic imperative of advancing AI, we expect this level of spending to continue, and we think the potential payoff of this investment is justifiable as well. But rather than take our word for it, we thought it would be insightful to hear directly from Michael Dell of his namesake company, who last week appeared on the BG2 podcast with tech investors Brad Gerstner and Bill Gurley.
You got a $114 trillion global economy, right, in 2025. And services economy is 2/3 of that. If we believe that a 10% improvement is possible in productivity, if you just keep it simple and you say 10% improvement, that's worth $10 trillion, right? And so the amount of investment that is occurring today in AI could be quite a bit less than is really justified. I mean, if we believe in a 10 to 20% improvement, and I don't say that lightly because that's like an enormous thing if it were to occur. But let's just stick with this for a second. If we had a 10 to 20% improvement, the investment in AI should be more on the order of $2 to $4 trillion
per year.
Yeah. Yeah, and that's not where we are.
Right.
If Michael Dell is right about the trajectory and payoff of AI investment, that implies more growth for NVIDIA, which last week became the first company to hit the $4 trillion market cap milestone. At its current market cap, NVIDIA's value is now equal to 3.6% of global GDP. It's greater than the GDP figure for the UK, France, and Germany. While on first glance this may seem preposterous, one might ask how much of future global GDP will be dependent on NVIDIA's GPU chips. We think the answer is actually much higher than $4 trillion. In this light, and given NVIDIA's continued sales and profit growth, we think the market cap is more defensible. As always, please let us know if you have any questions or if you would like to discuss your portfolio or investment opportunities. Thank you very much and have a great week.